This is Wallet Brief, where we break down what actually moved the US economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. Intel stock is drawing attention again, as investors react to renewed movement in one of the most closely watched tech companies. After periods of mixed performance, Intel is back in focus. What's driving Intel stock right now is a shift in expectations around the company's future. Investors are watching how Intel positions itself in the semiconductor space, especially as competition and demand continue to evolve. The real trend behind the headline is repositioning. Intel has been working to regain momentum, and the market is reacting to signs of progress, but also weighing the risks. This creates movement as investors decide whether to stay in or move out. For your wallet, Intel stock can matter even if you don't own it directly. Large tech companies influence the broader market, especially in sectors tied to innovation and economic growth. If you do hold Intel stock or similar tech investments, you may see more noticeable swings in value. There's also a broader impact. Semiconductor companies play a key role in the economy, powering everything from consumer devices to infrastructure. When a company like Intel moves, it can reflect larger trends in technology and business investment. At the same time, Intel stock is still part of a competitive and changing industry. That means movement can be driven by both optimism and caution at the same time. Looking ahead, investors will be watching how Intel continues to execute on its strategy. Strong signals could support further gains, while uncertainty could lead to continued volatility. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with